Welcome back to Candlestick Signals for today's market. August 29th, 2025. Buckle up, traders, because we're about to dive into a roller coaster of candlestick signals that could make or break your portfolio. From tech titans soaring to new heights to mid-caps teetering on the edge, today's market is a battlefield of bulls and bears. Are you ready to decode the secrets hidden in these candlesticks? Let us jump right in and uncover the moves that could shape your trading strategy for the weeks to come. U.S. stock indices closed higher on August 29, 2025, riding a wave of renewed investor confidence in artificial intelligence and stellar results from tech giants like NVIDIA. While global markets experienced pockets of volatility, Wall Street's major benchmarks demonstrated underlying strength, maintaining an upward trajectory despite intraday fluctuations. Let's start with the technology sector, which led the charge last week with a staggering gain of 7.9% and a market capitalization change of $57.2 billion. The software and IT services subindustries were the primary drivers of the sector's growth, each posting increases of approximately 8.1%. Hardware and storage weren't far behind, with a weekly return of 7.2%. Last week, the technology sector formed a bullish continuation candlestick, a positive pattern signaling that the current uptrend is likely to persist. This formation suggests that buyers remain firmly in control, pushing prices higher. The technology sector has exhibited strong momentum for an extended period, and there's a high probability that this positive trend will continue in the near term, potentially reaching new record highs. Diving deeper into the technology sector, we saw Advanced Micro Devices (AMD) soar by 2.5%. Propelled by increasing AI adoption and a bullish engulfing daily candle. This powerful candlestick pattern, formed when a smaller, bearish candle is completely engulfed by a larger bullish one, indicates a potential trend reversal and renewed buying pressure. NVIDIA, another tech heavyweight, continued its uptrend with a rising wedge formation, while Tesla broke out late in the session, confirming renewed accumulation. These bullish patterns in key tech stocks underscore the sector's leadership and suggest further upside potential. Shifting our focus to the basic materials sector, we observed moderate growth, with select materials stock leaders like Newmont and Agnico Eagle Mines posting robust gains. The overall sector market cap moved positively within the week, reflecting sustained demand for core commodities and industrial resources. The basic materials sector saw a 3.8% increase, translating to a market capitalization change of $28 billion. A bullish engulfing pattern formed on Wednesday, indicating a potential reversal of the previous downtrend and signaling renewed buyer interest in this space. The candlestick structures observed across major indices today included Marubozu, Doji, and engulfing candles, each revealing distinct market narratives. Large-bodied bullish candles marked strong buying momentum, particularly in the technology and healthcare sectors. Short-bodied or doji candles were prevalent in the financial and consumer discretionary sectors, indicating phases of indecision and trend pauses. Extended upper or lower wicks on select candles in the energy and utilities sectors highlighted active attempts by buyers or sellers, essential signals for trend reversals or support and resistance tests. From a technical perspective, a golden cross on the KDJ indicator paired with a bullish Marubozu on select intraday charts flagged robust upward momentum, especially in large-cap technology stocks. This combination of indicators suggests strong buying pressure and the potential for continued upside. Meanwhile, bearish Marubozu patterns, particularly in sectors grappling with selling pressures such as real estate and telecommunications, warned of renewed downward moves. The S&P 500 and Nasdaq 100 exhibited higher lows on larger timeframes, reinforcing a neutral to bullish technical bias sustained by resilient momentum and positive sector flows. In the industrial sector, we saw interesting developments among mid-cap stocks. Select mid-caps displayed narrowing Bollinger Bands and Marubozu structures, indicating imminent volatility and possible trend shifts. For instance, CTS Corporation formed a bearish Marubozu, closing near its low and suggesting potential downside risk. Conversely, Masterbrand Inc. showed a bullish Marubozu closing near its high and hinting at possible upward momentum. These contrasting patterns underscore the importance of stock-specific analysis within the broader sector context. When comparing large-cap and small-cap performance, we noticed significant divergences. Large-cap technology stocks led gains with strong bullish structures, exemplified by the bullish engulfing patterns in AMD and NVIDIA. In contrast, small and mid-caps showed more mixed, indecisive patterns with frequent dojis and inside candles. This disparity highlights the current market preference for established tech giants over smaller, potentially riskier plays. Market sentiment remains cautiously bullish, with investors keenly focused on AI-driven sector rotations and external macroeconomic signals. Strong bullish candlesticks in the technology sector and selective bullish momentum in defensive sectors like healthcare and consumer staples provide an improving near-term risk tone. However, intermittent volatility and trend hesitation persist, particularly in financials and cyclicals, as evidenced by the frequent appearance of doji candles in these sectors. Let's break down the major industry formations by capitalization. In the large-cap space, persistent bullish engulfing and hammer patterns dominate, reinforcing major sectoral leadership in technology and healthcare. These formations suggest continued investor confidence in established market leaders. Mid-cap stocks, particularly in the industrials and consumer discretionary sectors, displayed volatile Marubozu and inside candles, suggesting both opportunity and risk. The presence of these patterns indicates potential for significant price moves in either direction, warranting close attention from traders. Small-cap stocks presented a more challenging picture, with a high frequency of doji and uncertainty patterns pointing to indecision. This underscores rapid sentiment shifts and tightening liquidity conditions in the small-cap space. Traders focusing on this segment should be prepared for increased volatility and potentially choppy price action in the coming sessions. To summarize the day's key movements, let's look at our market snapshot table. Index sector major candlestick direction, signal strength. Notable stocks in P500, Harami bearish, neutral, bear, moderate. Nasdaq 100, bullish hammer, bullish strong. NVIDIA tech sector, bullish engulfing, bullish strong. AMD industrials, mid-cap. Marubozu bear, bearish moderate C. TS master Brandsmall, cap doji uncertain weak. As we conclude our analysis for August 29, 2025, it's clear that today's candlestick patterns reveal a market at a crossroads. The technology sector's strength is undeniable, with bullish candlestick structures pointing to continued momentum. However, broader indices underscore a delicate balance between risk-taking and caution. Marubozu and engulfing patterns in large caps highlight continued bullish conviction, while variability among small and mid-caps calls for selective positioning. Looking ahead, prudent traders will need to heed both signal strength and volatility cues before repositioning in September. The technology sector, with its strong bullish continuation patterns, appears poised for further gains. However, the mixed signals in other sectors, particularly the doji formations in financials and small caps, suggest that caution is warranted in these areas. As key technical levels are tested in the coming week, keep a close eye on the formation of new candlestick patterns, especially in sectors showing indecision. The bullish engulfing patterns in large-cap tech stocks could signal further upside, while the bearish Marubozu and select mid-cap industrials might present short-term trading opportunities for the nimble investor. Remember, in the world of candlestick analysis, today's patterns are tomorrow's trends. Stay alert, stay informed, and most importantly, stay ready to act on the signals the market is sending. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.